What's going on, guys? Today I wanted to go over my results from trading options in 2021. First, we'll look at how the overall market performed. Then we'll look at how my options trading and how that portfolio performed. And then finally, we'll get into setting some goals for 2022. So I hope you appreciate all the transparency in this video. And if you do, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit the subscribe button. All right, so first we're going to take a look at SPY, which tracks the S&P 500, and basically I think this is the best benchmark for how the overall market is performing. So if we're looking at the year-to-date results, we're actually a little under 25%, so we're at 24.7%. If we look at the year results, so year over year, going from basically December 17th, 18th to December of 2020 to December 18th of 2021, we're actually a little bit less than that. We're at 24.57%. So year to date is what I want to look at more. Obviously, it's always good to compare yourself against the S&P 500 and kind of see how your results would have been if you had just invested in the S&P 500 at the start of the year and held, versus kind of more actively trading options, which is what we're going to be looking at today. So here's something that's also very interesting to look at. It's interesting to compare your results against hedge funds. Obviously, hedge funds, they more actively manage. You have a wide variety of hedge funds out there that cover technology stocks, basically Bitcoin, other thing, and cryptocurrencies, anything you can imagine. Basically, there's hedge funds and funds that track those results. So it's always interesting to see how you actually compare to people who are actively managing, professional investors who are basically actively managing funds. So this article specifically is looking at kind of inflows and outflows of cash over the last kind of 3 years, but they do have the results of overall the kind of the average hedge fund results. And what you can see here, they're going all the way back to 2011 and through 2021. And the results for 2021 are only basically through December 1st. So what we're seeing here is actually a average return through by hedge funds in 2021 of 13.9%, which we have up here. So that's very interesting, and it's also interesting, especially interesting, seeing that the S&P 500 returned almost 25%. So again, hedge funds kind of consistently underperforming the market when compared to the S&P 500. And they also do have sectors as well over here, which is interesting. So you can see equity strategies, so that's basically stocks, right? You can see that they're actually right there, kind of a little bit lower than probably that 13%, because the results above take into account kind of all these variety of strategies, credit strategies, event-driven strategies, micro strategies, multi-strategies, and then relative value strategies. So it's interesting kind of to see how the different strategies have performed. Obviously, equity and event-driven have been the most significant and had the best returns. So really interesting results there, and it's interesting to see and compare with what our results come in as. So here, let's look at all these dashboards that I have kind of made up here. And we started the year with around $3,000. So we actually started with a relatively small account and basically grew it over time, mainly through obviously adding capital. That's the biggest way when you have a small account, that you're going to increase your gains and increase basically your overall dollar returns, especially with options. So what we started pretty low with only kind of making $52 in the month of January, kind of worked our way up to $100 here through February, March, and April. And then May had a great month. June, we had a big pullback, and we kind of basically got stuck in some rocket mortgage wheel options that kind of led us into trouble there. So we diversified our strategy actually in July and really started incorporating and focusing on credit spreads. And then from there, you can see we had a lot more stability. We had the pullback in September, which kind of affected our results there, and also into November, the end of November, when we kind of experienced another pullback in the market. So really didn't incur any losses. We just weren't able to gain as much and basically sell as many options. So the other benefit, though, is with that pullback, we were able to sell spreads out into December, as well as ran a couple additional wheels and really capitalize on a solid December, a lot of volatility, and we were able to almost make 350 dollars. Obviously, there's still 2 weeks left in the year, so we could still hit that benchmark. But as of right now, I'm not really anticipating a whole lot of more trades coming on. We do have a few more trades actually to come off, which might drop this number. I think there's 4 more trades, and we'll probably close them for around $5. So this might actually end up being closer to $320. But overall, kind of looking at our percent returns on capital. So even though we grew our capital, we kind of stayed consistent. Obviously, June we had that bad month like I talked about, but other than that, we were kind of in that 1.5 to kind of 2% return range, with just a couple hiccups in there as the market kind of reacted against our strategies. And then cumulative premium collected. Obviously, we overall, as you collect premium, this line hopefully always goes up. It's more about what is the slope of the line going up. So you can see we had a few good months in here, and we've kind of continued that. Obviously, May into June, we had that poor month, and we basically barely had any increase in premium there. So overall, solid things here. So now let's jump into a lot of the trades that we took over the past year. So as I previously mentioned, I started the year with $3,000, and you can look kind of over here at the month by month results and see where I added capital. I do kind of anticipate I might add more capital in December, which would actually drive our percent return down, but overall it's obviously a good thing in the long run. This shows kind of where our account is sitting at and how much capital we've actually added. So in total, we've only actually gained around 6%, 6.3% basically. And a lot of that has to do with basically SoFi and Rocket pulling back. So right now, obviously we're down below where we originally sold puts on those shares. And basically with that, right, we've technically incurred unrealized losses. So if SoFi and Rocket basically bounce back up, I fully anticipate this number to shoot up. So here I'll actually uncover the return on capital and the yearly return on capital. Obviously these numbers are about the same since we're so close to the end of the year, but I want to first go over and look at all these trades. So we started the year trading a lot of AT&T. That's kind of a safe pick, at least in my mind it was. We were trading high strikes back then. Obviously AT&T is down quite a bit since then. If you haven't seen my video, go check it out on AT&T. I think it's basically very undervalued, and right now would be another good time to start selling puts back on it. I haven't really looked into it because AT&T doesn't have a lot of options, volatility and volume, but it might be something that I pick back up in the new year on. Dropbox we were interested in, liked kind of the price target there, and basically sold some options, and then it spiked up. We kind of stopped selling puts against that stock. IVR, this has been another kind of struggle that we had. We sold a put and basically got exercised on a couple of them. I think this was even actually last year. I think it was 2020. And from there, it's kind of sunk, and we're really just waiting for a bounce. I think it's got the potential to run up, but right now it's just kind of been very uninteresting. So we've been selling puts selling calls way out of the money and collecting just a little bit of premium, but we're down kind of big on this. Luckily, we didn't put a whole lot of money. I think we've like $900 in the stock. Again, so here's Rocket. Here's when we kind of sold these puts, and you can see here's where we were kind of assigned. We were assigned at $20, and we actually sold a few more, and then basically I think at one point we had 300 shares of Rocket, and then we got some called away when the stock bounced back up. I'm fairly comfortable holding Rocket at $20. I think long term it's going to work itself out. It's again a relatively new IPO stock, and I think over time it's going to find its kind of footing in the $20 to $30 range. So I'm comfortable with it. SoFi also got assigned here at $17 back in July, and then basically have been selling calls ever since. I kind of wish I had actually sold 2 puts on this, because this is very kind of an interesting stock. So I've recently actually increased basically started selling puts back on SoFi, because it's at $14 basically is kind of where we're at right now. Again, I have a lot of videos on SoFi. Go check those out on my channel if you're interested in that. But as I mentioned, here in July, we started looking at put spreads. So we started selling put spreads and collecting premium, kind of stabilizing the account. So if our stocks pull back, we aren't necessarily worried and we can kind of keep collecting premium on it. So SPY became kind of a staple, and we started selling a lot of spreads on SPY. So really July was only a couple, and then August was really our first full month selling spreads on them. And then you can see we basically continued selling calls against our Rocket and SoFi shares, which kind of supplemented some of our premium as the volatility in those stocks kind of fluctuated around. So again, that's basically how the year kind of played out, was more SoFi calls and more put spreads. So kind of, you can see all the trades in here, obviously buying them back. You can see that we kind of consistently bought back around the $4 to $5 mark, and then we're selling kind of around the $20 to $25. I really don't like selling put spreads much below $20. So that's kind of where we're at. Again, 30 to 40 days expiration on most of these. So these are the 4 trades that we have left still on that should get closed out. This is the only one that I would be slightly worried about at the 420 strike price. We're sitting around like 470, I think it is, 460. So we're still $40 off of this, and it would have to, basically the stock market would have to drop quite a bit, $40 in the next 2 weeks, which I think is kind of unrealistic. So I think overall we're in a good spot. Let's jump back up real quick and take a look at our percent return, and this will be a good comparison against the S&P 500. So we're sitting at 21.36. Like I said, I don't really anticipate a whole lot more trades going on, so we might actually end up around this this return on capital, which is 21.3. It's kind of where I'd anticipate. And if we jump back again and look at the S&P 500, it was 24.7. So just under 3-4% less than the S&P 500, but it's been a very solid year for the S&P 500. If it traded sideways this year and basically had like no real return, just some volatility, obviously we would have outperformed. And overall, if we can consistently do this, which I think is reasonably possible, we would outperform the S&P 500 compared to its historical average of around 10 to 11%, depending on really where you look. So that's kind of a rundown. Obviously you could pause the video wherever you want, kind of look at all these trades if you want to confirm whether they're real or whatever. Obviously it's up to you. You can do whatever you want, but this is full transparency, kind of all the trades that I've put on and taken off over the year of 2021. So the last thing I wanted to touch on in this video is goals for 2022. And basically I think 3 is a good number. It's a solid number of goals. You don't want too many where you can't achieve all of them, and you don't want too few where you're kind of solely focused and not really pushing yourself to achieve a lot of things. So anyways, the first goal that I have on here is thinking like a business. So I want to address and basically look at my options account like it is a business. So I want to make sure I'm adding capital consistently, whatever that may be. If it's $500 a month, $1,000, $2,000, whatever it is, I want to make sure I'm adding capital, basically funding my business, right? Because that's kind of the thought process, is look at it like a business, look at how I can produce income, and basically make sure I'm investing capital into the business. The second thing I want to focus on is scaling my trades. So right now with my spreads, there really aren't enough strikes in the month on SPY for me to really put one trade on. So I need to start scaling up to basically two trades, so 2 spreads on all kind of my trades, and especially focus on high when volatility is high, kind of scaling up my trades and basically capitalize on things like that. And then the last thing that I want to make sure that I focus on, because I think we could see some continued volatility in 2022, especially to the downside, I want to make sure that I have a cash allocation basically at all times. I'm thinking right now around 30% of my account I want to be in cash basically at all times, and that'll help me with basically managing any trades if I have to pull things off, or more importantly, be able to put more trades on, right? If volatility spikes, I want to have a cash reserve where I can capitalize on that volatility, instead of what I've ran into kind of here in 2021, where I will have trades on and basically volatility will hit and I won't have any cash to put new trades on. So I'm sitting here kind of waiting for theta to take over, for volatility to compress a little bit, for me to be able to take those trades off. So those are the three things that I want to focus on for thinking like a business. The second thing is I want to focus on spreads. I basically want to make sure that I'm have a very laser focus on spreads, and basically that I'm only using the wheel option when I really like a stock and I think the stock is undervalued. So in the past, and kind of with Rocket and SoFi, SoFi has kind of been the first stock that I've looked at and been like, I think this is a very bullish stock. I think long term it's going to outperform and do really well. Rocket was more a volatility play. There was a lot of volatility in Rocket, so I thought, let's sell some puts. I think it's got some upside, but it wasn't something where I was fully confident that its upside was kind of there at the $20 level. So I want to make sure that I'm only using the wheel on stocks that I want to hold and like to hold kind of for the long term. And that's obviously easier as you scale up your account as well. So as my account gets larger, basically I can start running options on maybe stocks like Apple and other stocks that I kind of like for the long term. And then the final thing that I have on here is I want to trade some leaps options. So I want to find stocks that I'm bullish on. One I've kind of touched on or thought about is Alibaba, and another one that I'm kind of potentially looking into is SoFi. And I just want to basically trade a few leaps and kind of see what returns I get, see if I'm comfortable with them, and kind of start with something low risk, where I feel like I can be successful trading leaps, and then kind of potentially scale up from there, because I think there's a lot of potential in trading leaps, a lot of return. If it goes well, obviously I'll make videos on it and let you guys know kind of how it's all going. But yeah, those are my 3 goals that I'm kind of looking at for 2022. Anyways, that's all I had in the video for today. So I hope you enjoyed the transparency and really got some value out of this. If you did, make sure you drop a like down below. And if you want to see more videos like this, make sure you hit the subscribe button. And as always, have a wonderful rest of your day.